I'm Deborah Borchardt, and this is your midday market update. All the indices are in the red territory. We started the day on a good note. It seemed like we were shrugging off the data out of China, assuming that they would start the stimulus, and then things took a turn for the worse over at NASDAQ, and that's pulled the rest of us down. Joining us now is Mark Newton. He's the chief technician over at Greywolf. So, Mark, what happened with the NASDAQ? What prompted them to sell off so dramatically?
You know, a lot of this is just a drying up in some of the buying of some of these go-go momentum stocks that have led the market for so long. And so you started to see that initially with Netflix and Priceline and Tesla over the last couple of weeks. Technically speaking, the NASDAQ composite and the index getting under mid-March lows, under March 14th, is definitely not a good thing for the markets. I think that if the other indices start to follow suit, if you see the S&P and the Dow also start to breach those levels, for the SPX, a lot of people are looking at 1840, and that's very important, then you could see a correction over the next couple months. It's very much a good possibility for a few different reasons, but a lot of reasons. If you look at the quality of the rally since early February, fewer and fewer stocks have been hitting new high territory, and that's been something we've been talking about for a while. But you have what's called momentum divergence and negative divergence, where the indices go higher, but yet momentum falls, and that's been a sort of an issue that a lot of technicians have been looking at, and that I've tried to talk about. But it's, we haven't really seen any follow through in the price activity up until really the last couple days. If you look at the last 2 days, we saw a big pullback in a lot of the sectors that led us higher. Healthcare, consumer discretionary. I mean, those have been former market leaders, and now all of a sudden they're falling to new weekly lows. They're weakening more and more. So now you see the NASDAQ moving down to monthly lows, and that's a concern because typically small caps will tend to lead. For the Russell, you want to look at a level right near 1171. If the Russell starts to also do that and lead, then my thinking is we could be in store for a correction probably into mid-April.
Maybe put your finger on that sell button.
You know, it's still a little premature. I still think the S&P is holding up okay, but more and more I'm getting a little uncomfortable with just recommending a flat-out long position. It's really going to take the break of these trends. We haven't seen that. But the action in the NASDAQ today raises some eyebrows. It's at least one warning sign investors need to watch.
All right, and Mark has given you that point to keep on your radar so that if you see that, you know that you've gotten warned for these signs of troubles and where to find them. That's Mark Newton from Greywolf, and I'm Deborah Borchardt with The Street.